Good afternoon, everybody, and thank you very much for attending our webinar today. It's a beautiful Tuesday, and we're going to speak about investment options within superannuation. We'll just give everyone a few more seconds to join the webinar, and then we'll commence very, very shortly. Excellent. Okay, thank you, folks. My name's Michelle Seguera. I'm one of your member account managers with Brighter Super. And an important part of my role is guiding our valued members towards a comfortable retirement. And this is done by giving them or you a better understanding of your superannuation account. Not surprisingly, one of the things I get asked most about investment options, what's available? And by the end of this webinar, we're aiming to give you very useful information to help you understand your options. I'll be asking some questions as we go through the webinar today to help you get a better understanding of the content. So before we get officially underway, Brighter Super acknowledges our traditional owners of the land where we meet today. And we do pay our respects to elders past, present, and emerging. We are proud to serve Queensland's 17 Indigenous councils, and we strive to provide positive outcomes for our members who identify as Aboriginal or Torres Strait Islanders. Now, it is important to understand that the information and examples contained in the presentation today are general in nature and have been prepared without taking into account your individual objectives, financial situations, and needs. It is important also to remember when making decisions about your super options that you obtain the relevant product disclosure statement and target market determination and consider your own personal circumstances. You can access these documents and the financial services guide from the Brighter Super website, www.brightersuper.com.au. Today's webinar will run for around about 45 minutes. And we know that many of you have submitted questions already, which we've tried to incorporate into this presentation today for you. You can also post your questions in our chat feature, and we'll aim to answer those directly for you. And in saying that, we've got Greg Leaney standing by as our moderator today. Greg's usually out and about running around in the field, providing super health checks to members in all different regions across Queensland. Where are you, Greg?
Thanks, Michelle. Good evening, everyone. I'm looking forward to answering any questions you may have. Just a reminder to send these through the Q&A feature on your screen at any point during the presentation. Thanks, Michelle. I'll hand back to you.
Thanks, Greg. Now, as I mentioned, we've got about 45 minutes and we should have questions and time to answer those at the end, and we'll try to answer as many as possible. Luckily for us, it's not 2 for Tuesday. You actually get 3 of us. So we've got Callum as well. He's one of our very valued financial advisors who will be presenting with us a little bit later on. You there, Callum? Say hello.
G'day.
Hello.
Evening, everyone.
Thanks. We also will be running through some poll questions throughout the webinar today. And when these pop up on your screen, you'll see them. Just click the answer that you feel is most appropriate for you. But before we move on to the main subject, the star of the show, I'd like to take the opportunity to explain briefly who we are, as we do have some non-members joining us today. So the merger between LGIA Super and Energy Super, plus the acquisition of Suncorp Super, has enabled us to increase size and scale. However, we do remain committed to investing in personalised member services, which you all know, enjoy, and hopefully love. We serve over 280,000 members with more than 34 billion, yes, billion, funds under management. And we have received double-digit returns for the balanced accumulation and balanced pension options in the full year of 2024. So we're very quite proud of that. Now let's talk superannuation investments, which is why you are all here. Okay, so you're able to make a number of choices about super, and one of the most important is being deciding how your super is invested. Your investment options that you choose could make a very big difference in your super balance over a period of time. And there are various factors to consider when making these decisions. They include, on your screen, you'll see how long your money will be invested, known as your time frame, how comfortable you feel with volatility or your risk appetite, the levels of return you expect. And we refer to these as return expectation. What do you expect to get back? The other investments you have outside of super and the importance of diversifying or diversification, and the amount of money you're investing outside of super guaranteed payments, and additional contributions. And we'll cover these in today's presentation. So the member online portal, which I'm hoping some of you or most of you are using, also contains very important information such as your current balance, the contributions you received during the financial year, the cost and the levels of insurance that you currently hold, any nominated beneficiaries that may be on your account, which are very, very important, your yearly and long-term investment earnings or the performance, and your fees and cost. You can also find information on your annual benefit statement, which is found on the member online portal under statements and letters, which is located when you log on the left-hand side. So now you know where to find your investment option that you might be in. Let's take a look now at what investment options you may be available in superannuation. So as you can see, there's lots of boxes on your screen there, and some people think of their super as a single investment, but it can potentially be invested in many different asset types. So most super funds offer different investment choices, and investment choices offered by super funds can either be ready-made or a mix of different asset classes, or what we call maybe a blend, or single sector options, which is investing just in one asset classes. Diversification can be achieved by choosing a ready-made diversified option such as growth or balanced. These are in names of investment options, or by choosing your own mix of single sector options. Investment choice is the ability to select which ready-made option or asset classes you wish to be invested in. So our first poll question, let's have a look. Our first question is, do you know which investment option you are in? So just give everyone a little bit of time to be able to do that. Thank you so much. Oh, perfect. Everyone is very on the ball and knows exactly where they're almost, well, we've got possibly a couple of people that can do some homework with that. Thank you very much for answering. I appreciate that. Okay, so let's now talk about the assets in a little bit more detail. So you may have heard investment options described as growth or defensive, and assets such as equities known as shares are described as growth assets. These may see volatility over a short term, and the value may go up and down, but over a long period of time, they generally experience high growth or higher growth. Asset classes such as cash, fixed interest are described as defensive or defending options. They carry less risk in terms of volatility and capital loss, but they also offer less potential for high returns. The purpose of a defensive asset is to provide stability in times of market volatility. And ready-made diversified options are made up of different mixes of growth and also defensive asset classes. Okay, so investment options vary from fund to fund. For those non-members out there, you might have some familiar words. Some super funds define their investment options in terms of their risk characteristics, such as growth or balanced strategies, where you do not have to make an investment choices. If you choose not to, your investment and your money will be invested in a default investment option. And for Brighter Super members, that is our My Super option. So depending on your personal time frame, risk appetite, and your return expectation, which we talked about earlier, this may not be the right option for you right now. So it's important to understand that everyone's personal situation varies and everyone's attitude to risk and return also can be different. And if you're not sure what some of these terms mean, just be rest assured we'll discuss these in further detail for you so you can understand. So you may have heard of the phrase past performance is not a reliable indicator of future performance. When you hear super funds talking about their returns, it's a very, very common phrase. This is not just something that we say to absolve any responsibility. It's a very, very important thing to remember. And let's have a look at now why it's important to understand this concept. So this is actually one of my favorite slides. It looks very busy, but we often use this in our presentation. It shows the performance of 7 different asset classes, plus one ready-made diversified option over 15 years. So the years are up at the top of the screen there that you can see, and then we've got all the different coloured asset class boxes. I'll just take a moment to call out the grey boxes, which represent that ready-made diversified portfolio. You can see it there as port. For the purpose of the presentation, it is not the asset class themselves that is important. It's the performance over time, all those 15 years, as you can see in that slide. In the slide, you can see that there's not one particular asset class that has consistently outperformed another. Okay, the most striking feature of this chart is that over 15 years, the asset classes have performed very differently at different times. So sometimes the best performer in one year is not as strong the next year. And there can be many factors as to why that is. This is what super funds mean when they say past performance is not a reliable indicator of past performance. So the reason why one super fund may look at taking they might have a look at taking a diversified approach into investing. This is by spreading the funds across different asset classes so they can balance out the volatility, spreading the risk, and basically not putting all the eggs in one basket. That makes sense for you. Now, as called out on the other screen, on the previous slide with all the grey boxes, the grey boxes here that we can see on this slide is the ready-made diversified portfolio. That is, it's a mix of different asset classes. So we can see here that by diversifying, it's actually smoothed out the highs and lows. That wave and that line is a little bit more smoother, so to speak. And the single asset classes here, it provides less volatility of investment choice. So we did mention another consideration that people should make when choosing their investment option is the time frame. Very important. How long they'll be leaving their funds invested for, or how long they'll be invested before they actually need to access them or reach retirement. So everybody's time frame is different. My time frame may be very different to yours, Callum, and yours, Greg. So and some of our members on this, we must have very, very different timelines. Just as much as everybody's attitude or values towards risk. It's always very different. So discuss this and with some resources we have available to our members. I'm just going to hand it over to Callum so you can have a little bit of a chat to our members and non-members. Thanks, Callum.
Perfect. Thanks, Michelle. So hi, everyone. My name is Callum. I'm one of the financial advisors here with Brighter Super. Today, we're going to take you through some of the tools we have available to help us in making decisions about those investment choices that Michelle's been speaking about. So one of the questions I guess often asked is, what is the best way to invest my super? And as you can imagine, there's not one single investment option or strategy that would be a fit for everyone. In fact, there are a number of different things we need to consider when choosing the right investment option for you. And one of them is what we call a risk profile. So what is a risk profile? A risk profile is an individual measure that we use to understand how we feel individually about risk and return. It takes into account things like our tolerance to market volatility, our investment timeframes, and our desired return outcomes. We'd all love, I guess, those really high returns with no volatility. However, generally speaking, the more risk we take, the higher the return we may expect over time. However, the higher increased chance of short-term volatility as well. Excuse me. So, as an example, if we have a look at, I guess, a growth investment option, it's expected to generate a higher rate of return over the long term. However, it may fluctuate more during times of market volatility. On the other hand, if we look at a conservative investment option, it's likely to have fewer negative return years overall. It may not drop as much as that growth option in the time of a downturn. However, there will be a trade-off for less downside risk, is that the expected returns over the long term will be lower. Understanding your risk profile is important to help better prepare for market volatility and make more informed decisions. The concern of being invested outside your risk profile is that if you're invested too conservatively, you may be missing out on potential returns that may impact the longevity of your funds in retirement. I guess, on the other hand, if you're invested too aggressively, you may see greater volatility than you're comfortable with. So both these scenarios may not result in the desired outcome, and that's why it's important to understand what is your individual risk appetite. Cool. So one of the resources that you can find online is the risk profile tool on the Brighter Super website under the resources tab. What it does is it asks 8 questions on topics such as how you feel about negative returns, what action you might take during market volatility, and your superannuation goals. After answering each question, it will then provide you with a result and some information about the type of investor you are based on those responses. When answering the questions, I would encourage you to consider the bigger picture though. None of us like to see negative returns. However, this is where understanding and knowing your investment timeframe becomes really relevant. As an example, if you're in your 40s and you're still 20 years away from being able to access your superannuation, a negative return may feel very different compared to someone who is considering to retire in the near future. However, it is important to note that even if you're close to retirement, your investment timeframe may be longer than you think. Retirement isn't necessarily a line in the sand where you stop investing in superannuation. Many members will choose to move into a superannuation pension account where the funds will remain invested, and the investment returns can help fund your retirement for the next 20 or 30 years, as an example. Brighter Super has a variety of different pension products available, and we do encourage you to contact us if you'd like to find out more. Cool. So one thing just to note with the risk profile tool is it doesn't actually give you a recommendation on how to invest your superannuation. It just gives you the understanding of your risk profile. So after completing the online tool, if you wish to receive some help on choosing the best investment options for you, you can actually book an appointment with our Brighter Super intra-fund advisors. This type of advice is included in your membership, and the conversation is done over the phone and usually takes around 20 to 40 minutes. The advisor will go through a similar process with you, asking you a series of questions to determine your risk profile. But what can be helpful is that they'll also tailor it to you and answer any specific questions you may have. Importantly, they'll also make a recommendation on where to invest your superannuation funds and will provide you with a statement of advice, which is a financial plan. This written report that we refer to explains your risk profile, the investment mix that will be recommended. It also outlines any changes to the investment fees as a result of the advice. And this is a really good opportunity just to move to our next poll question. Would you consider using the risk profiler tool?
I love the tool. I think it's great.
Yeah, we use it with every client meeting we take as well.
Yeah, the questions are easy to understand too, which is good.
So really good outcome there. Perfect score, 13 out of 13. So yeah, it sounds good. And I guess if you're wanting any kind of further help on where to find that tool, feel free to give us a call. All right, well, I think that's everything from me. So I'll hand that back to Michelle.
Thanks, Callum. That was great. Okay, so we do understand that that is a lot to think about when considering your investment option. And the good news is that we do have help available from Brighter Super. We're here to help you through this journey to retirement. Um, our the Brighter Super commitment to our members is personal service. It's something that we pride ourselves on, and with twice the industry average of super specialists per member. So we're here for you. We have a dedicated team. So if you'd like for one of our staff to get in contact with you about more general information about superannuation, you can book in for this. A super health check is what we call it. And what they are is 15-minute phone meetings. They're at no cost to you, which is fantastic. And it covers a range of general topics about super. So have a look on the screen there. Those some bullet points there and what we can cover off for you. Once you've built all that super knowledge, the next step from there would be to get tailored personal advice. So we have lots of different ranges of personal advice options suited for all our individual members, which is fantastic. If you're looking for something specific about contributions, investment strategies, or insurance need, the intrafund team, which works within advice, as previously mentioned, they can assist for you. So that's them on the screen there, intrafund, as you can see, and that's what they cover off. The next one we have is our retirement health check there, which can give you a bit of a projection on approaching retirement, such as how much super do you need to retire? And the other big question, do I have enough super? So retirement health check is with one of our financial advisors, just like Callum, to help you answer these questions. Our scaled advice provides advice on specific topics in particular, such as moving into retirement. So transitioning to a retirement account or a pension account from that accumulation or super account. And then we've got our comprehensive advice. Okay, so that's our fourth one on the screen there. And comprehensive advice takes a holistic view of your financial situation. So a round view of everything to tailor advice to suit your individual needs. The cost will depend on the complexity of the advice, and the cost can be deducted from your Brighter Super account as well. So in saying all of these, we hope that there's something there for everybody. It's never too early to start planning for your future. So please, I do encourage you to find out how we can help you along your journey. Similar to today's webinar, our our website has a range of seminars that can cover a whole heap of different topics. So keep an eye on this page as we do update it regularly, and there's always new things coming up and new times, more importantly, that'll suit you. If you register for any of our webinars, just keep in mind, regardless if you attend or you can't get there or something comes up with the family, you will receive a copy of the recording the next following day. So that's always good to come back to and have in your inbox. On the previous two slides, we did discuss a range of advice services. These cover our super health checks, our intra-fund advice, both of which at no additional cost for you, our members, and to the other types of advice, such as that retirement health check, scaled advice, and comprehensive advice. So, in saying that, viewers, our next poll question is, after today's webinar, are you planning on getting some advice? Maybe not now, maybe in the future, but that's okay. Something to look forward to. Fantastic. Pretty even split there. That's great. Some of you may already have advice, which is great. It means Callum's done his job, which is fantastic. Okay. So I have covered, and Callum, we've covered a lot of ground today in that short period of time. Now, keep in mind, you can also visit the resources tab on our website, brightersuper.com.au. And then there's lots of forms and info sheets on the website and more information about different things and topics within super that you might find handy. So keep that in mind. Now, what are we going to do now? Well, let's answer some questions or yeah, answer some questions. So over to you, Greg. I think I'll leave it with you to do
Yeah,
that.
great. Thanks, Michelle. That was a really interesting and great presentation. Yeah, really love the way you explain the asset allocations in our various investment options. That's a very, very important consideration when we're talking about investments. Now, we've had some questions come through. I think we'll have time for a couple of questions, and while Callum's here, I'll put him on the spot. But first and foremost, I have to give a general advice warning, and it's important to understand that, similar to the webinar itself, the information and examples we give in this Q&A session are general in nature and have been prepared without taking into account your individual objectives, financial situation or needs. And the first one, Callum or Michelle, is investment options. Are they the same in super as in a retirement income stream?
I can answer that one
Yep.
quite easily if you like. They are pretty much identical. There is just one additional investment option that's available only within the accumulation, which is called a My Super product, which is I guess a default superannuation investment option that all super funds need to have. So everything else besides the My Super product is identically available between pension and accumulation.
Oh, okay, great. Thanks, Callum. And probably got time for one more. Are there limits on how many times you can change investment options? I think the question's there around, can you change investments every day if you want? Or yeah, I think that's what the question, the heart of the question is.
Yeah, I can probably answer that one as well if you like. No, there's no limitations on how many investment switches that you can make. I guess just as a bit of background is part of when we're doing these risk profile questionnaires and trying to understand someone's risk profile, it is really designed to try and remove that, I guess, real reactive response when we're seeing little bits of volatility in the market and need to change all the time. So short answer is yes, you can change as much as you want. The long answer is when we try and design risk profiles and understand your long-term goals, needs, etc., it is designed to try and remove those really reactive switches all the time.
Oh, great. Thanks, Callum. I think we're getting pressed for time, Michelle. So I'll hand back to Michelle to
Thank
finish
you.
off the presentation. Thanks, Michelle. Thanks.
Thanks, Greg. Thanks, Callum. Appreciate that. I think must be getting dark where I am. I look like a floating head on the screen, but I've just put that last slide up, folks. If you wanted to have a quick, get your phones out and have a look at that QR code that you see. But I'll leave it there. We've got one more to finish up for tonight. Our fourth question. How satisfied were you with today's webinar? We'd love your feedback and would appreciate that very much if you could let us know. That'd be fantastic. Um, Perfect. Thank you so much. Oh, that's lovely. Excellent. Well, on that note, everyone's answered. We appreciate your time. We look forward to seeing you if we're out in the field looking after our members. But if you need us, give us a call. We're here to help.